In this video, we are going to go over what dollar cost averaging out of a position is. In previous videos, we've gone over what dollar cost averaging into a position or a company or a crypto is. This time, we're going to show you how to dollar cost average out. If this is our first time meeting, my name is Kevin McCoy of The Like-Minded Investor. With that being said, let's get right into it. Okay, first and foremost, dollar cost averaging. This is where you, you can have a lump sum of money, okay, that you're going to invest. You don't want to dump it all in the same thing or the same few things at the same level. You never want to get rid of all of your cash at once, unless you're the type of person to dump it, leave it, never look again, okay? You want to get in at specific levels. You want to mark out where you're getting in and where you can potentially get out. That is dollar cost averaging the correct way. Okay. That being said, we have what we call zones. All right. There are two zones here. Each blue line is an entry point. So there are two entry points per zone. This is zone one and this is zone two. I got zone two from a gap down here at COVID, zone one from this knob that retested here. Okay. This is Nike. We called these zones out a month or so ago, I think. All right. So how you dollar cost average in? Well, you would have this money set aside. And as soon as price hits this top 92.82, you would allocate some money. If it came to zone two, you would allocate a percentage of money. If it comes to 3 and 4, you allocate a percentage of money. Okay. If you miss this entry, don't worry about it. You allocate that money toward another play, another stock, another company, another crypto. All right. People say, what's the best trade? The best trade is the next one. Okay. Put your money in. If you don't allocate what you wanted to, it is what it is. Let it go, move on. There's more opportunity to be had everywhere in these markets. Okay. With that being said, zone one, zone two, Nike, holidays are coming. They just had good earnings, which shot them up. They're not going down, right? But when I mapped these out, I also have exits up here, okay? Now, exits, I like to go where there are a point, a point, a point, a point. There are areas of both support and resistance, all right? So there's one. Here's another. All of these. And then you're going to have the all-time high, all right? So you're going to have 3 exit points unless you're holding long term, all right? But this video isn't for long-term holders. This is to get into the trading side of things. This is more of a longer term swing trade, okay? This is months in the market, all right? But as you can see, if we zoom in here, from the top of entry one, yes, we did have a 4.29% drawdown, all right? But it quickly bounced. And we are now from entry number one, 13.92% gained. All right. But that is not our entry. I'm sorry. That is not our exit. Your exit can be here 26 to 31% on your money. But if it breaks this trend line, retest, it could continue to go up. So zone two is 55% to 59% on your money. And then back to all-time highs, almost 100% on your money. All right. You would slowly exit here. Say you have 100 shares. Okay. 25 exit, 25 exit, 50 exit. When we get here, you're probably going to want to hold. But you see what I'm saying? You accumulate back into cash and then on to the next opportunity. It's very, very simple. Let's do a couple more. I'll do Target. Target is not doing well, by the way. Out of the 12 or 14 that I called out, this zone wasn't even on there. This was an emergency. I put that on there for myself. But these are the two zones that I called out. And I mean, it's not doing well. It's good accumulation, but it could drop down more. We will see what happens. But that being said, when I had these positions, I already had this in mind. Okay, there's this tiny little spot here. I like it. Spot right here. I like it. You could even move it up a little so that it touches this. Okay, or you could do two different zones. Do that one and then this one. Boom, boom, and then an all-time high. Okay, from the top of the bottom zone to the first zone, 31% on your money. Second zone, 60 to 65% of your money. Third zone, 80 to 87% on your money. And then all-time highs, 141% on your money. You slowly exit here, slowly exit here, slowly exit here. You dollar cost average in the market the exact same way you dollar cost average out. Unless you just buy and hold or are waiting for exit number 2, waiting for exit number 3, waiting for an all-time high. Okay? That's up to you. That's the beauty of this game too, is all of these strategies, you get to create your strategy. You get to decide how you're going to manipulate your portfolio. Now, one thing I'm going to say on this style of trading, because this is trading, this isn't just investing, this is trading. You are now trading US dollars for stock and stock back into US dollars. You are trading. For this, you have to keep track of taxes. All right. Every single year, all of your profits are going to be taxed differently than your long-term hold. So why not have a separate account for that? It only makes sense. It's just cleaner, it's neater. The time comes, you're not scrambling around looking for all the info, going through the ins and outs. It's right there, plain sight, and be done with it. Just wipe your hands, be done with it. Pay your taxes and move on to the next year. Guys, if this video brought you any value, don't even like, comment, or subscribe. Just share with a friend or a family member that needs this information. And hopefully they will get some value out of it as well. Guys, until the next video, God bless.